Well, it's safe to say that news from the financial world has been confusing lately. Is the economy strong or about to bust? Is the inevitable recession close or still years off? And the Fed has responded by cutting interest rates. What does that mean for your retirement, particularly for retirees who are ready to set up their retirement income plan and start making other lifestyle decisions? Joining us is Bo Caldwell in Portland, Oregon. Bo, welcome back. Now, should those close to retirement create the income plan now or actually wait for interest rates to rise?
You know, that's a really good question. I've always believed that you should really have your plan set up now. Why wait? We don't really know what's going to happen. I have a crystal ball on my desk that hasn't worked in 10 years. So if you know what's going to happen, I'd love to hear it. But the way that I look at it is if we build an all-weather portfolio, an all-weather income plan, it doesn't matter whether interest rates go up or they go down. We're prepared for either way.
Now explain the difference between asset allocation and income allocation.
Totally. That's a common misconception about asset allocation versus income allocation. Asset allocation is really how you've built out your portfolio, particularly when you're in the accumulation phase. So when folks are saving for retirement, it's particularly important to be allocated to certain asset types as they grow. And one of the reasons is you want to have a ballast for your boat when the market's up, market's down. You want to have something that balances it out. But just as important, and really the one thing that's least planned for in retirement, is that income allocation. When you're taking income from your portfolio because you're retired, you don't have a paycheck anymore. So how much do we take from Social Security? When do we take it? How much do we take from our portfolio? How much can we take, and will it last? These are all things that I work with my clients on planning for, so that way they know no matter what happens in the market, we have a plan for it.
And finally, with all the uncertainty in markets right now, what are you telling your clients?
You know, it's funny enough, I tell my clients not to watch the news. I say, you know, what I watch in the morning, it used to be Mike and Mike, but unfortunately they're not partners anymore, but I listen to sports radio in the morning. I don't watch the market in the morning because it's doom and gloom. You know, if it bleeds, it leads. So really you should be talking to your advisor, making sure that you have a plan for whatever happens, because the news companies are really trying to sell ratings. They're not really trying to sell facts or what's actually happening. They're trying to scare you or to make you tune in. It's sort of like the weather. You know, you can prepare for the snowpocalypse, but they never know whether or not it's coming. So with all the turmoil in the market, it's really better for you, just for your own body, you know, to make sure that you're not stressing yourself out based on what could or couldn't happen, because we really have no control over what Washington does, what taxes do. We can control how much risk we take, and we can control how much income that we're taking. That's the only things that we can control.
My guest has been Bo Caldwell in Portland, Oregon. Thanks for watching Retirement News Online.